Hey warriors, I hope you're all doing good. Let's quickly do a revision with regards to the chapter of assessment and appeals procedure. A fairly easy chapter. You are going to get almost about 4 to 6 marks from either of the two chapters. So therefore crucial also for you. Now before I take the chapter itself, let me also clarify this to you. ICI has stopped asking you questions relating to all the concepts relating to the chapter. ICI is now more testing you more on the book back questions. So before you start the chapter itself, if you want and you want to quickly complete the chapter and if you have understood the chapter properly, rely on the book back questions of ICI and you fairly should be able to answer the question if at all it is being tested in exam. Yes, keep that thought in mind. But nevertheless, let's quickly do a revision. And when I do the revision itself, I will come and tell you these questions are there as a part of the syllabus and not part of the syllabus, so you can work on that itself. Yes, I'm going to do a quickly revision of the income from assessment procedure, the assessment procedure chapter. Let's quickly understand the chapter. As you start the chapter, the first thing which comes and says is that when you have an assessment procedure, you need to first know the hierarchy of the people. You first need to know the hierarchy of the people. The topmost person sitting on the top is called CBDT, which is going to split them into two wings. One is administration wing and one is investigation circle. Yes, whenever you have an administration wing, the peoples will be called as commissioners, principal commissioners and principal chief commissioners. But when you have investigation wing, you're going to have directors, principal directors and then director generals. And then director general. This is what you need to keep in mind. Other than that, nothing important from exam perspective. One thing you need to understand is that when it comes to assessing officers are your income tax officers, your assessment commissioners, your deputy commissioners, your joint commissioners and your other commissioners. Except for your appeals category people. These are all going to be the assessing officers which is going to take care of your cases, Any people above this are all going to be appellate authorities which are going to be handling all your appeal matters and any superior activities. The power of CBDT are given to you on the bottom, where they're coming and clarifying that CBDT has multiple powers given to you. First is directing by notification any IT authority to be the subordinate of another, which means appointing people. Next, issuing instructions and circulars to subordinates for proper administration. How do they do their work? Third, issuing special or general orders not being prejudicial to the assessee for proper and effective management of the assessment and collection of revenue. So handling how the assessment process should work. Next, relaxing any certain provisions for any kind of difficulties which may be faced, for example extending due dates and all those things. Then passing a general order, a special order, authorizing any IT authority to admit a certain claim, exemption, deduction, refund, carry forward and etc. Basically condoning all issues. Not relevant from exam, you can choose to ignore this and go. Yes, next, what are the case laws coming and mentioning? The case laws comes and mentions CBDT does not have the power to amend legislative provisions by way of circular. The same can be treated as ultra vires in the nature. Like I clarified when we did the basics also, that when you have a circular is only giving an explicit clarification of any ambiguities. It cannot come and amend the law itself, so therefore that is not permitted. Second, delay in carrying out an audit is a circumstance beyond the control of the assessee. Any delay in filing the return of income due to such reason should be accepted and the delay should have been condoned by CBDT. They have to take it as a liberal interpretation. They cannot come and deny all the claims. Yes, this is one thing which you need to keep in mind. Coming to jurisdictional officers, income tax comes and says, if you have to take in jurisdiction of the person, if the person is carrying on business or profession, then the principal place of business will be called as jurisdictional officer. That location's jurisdictional officer will become your assessing officer. If it is any other person, then it's the place where the assessee resides. So if you're into business, you will give the business address and that will become a jurisdictional place. But if it's any other location, you will have to take the other location. In case you prepare to choose for a change in jurisdiction, you will have the powers to apply for a change in jurisdiction, provided the PDGIT, DGIT, PCCIT, etc. people have been given the powers to make such transfers. They will be done after having a mutual agreement between the different circle for which you are going to have a jurisdiction to. No transfer will take place unless you are given an opportunity of being heard, meaning you will not be forced into a transfer unless and until you are given a reasonable opportunity. Third, in case the location is going to be transferred within the same city, meaning I'm going to transfer it from one officer to another officer, then I don't need to grant an opportunity, because at the end of the day the leader remains the same, so therefore there will be no change in that. That is what you need to keep in mind. Yes, next, in case there is any kind of income tax authorities have been given certain powers. First power is section 131, which comes and clarifies that income tax authorities have been given the following powers as the same as civil procedure code, which means they can look for discovery and inspection, enforcing attendance, compelling books of accounts and then issuing commissions, same as CPC. Income tax authorities above assessing officers have also been empowered to impound or retain books of accounts, meaning they can collect your books of accounts after providing a reasonable opportunity of being heard. In case the assessing officer wants to impound your books of accounts, he can also do so more than up to a period of 15 days. If he wants to do it above 15 days, then he'll have to get the approvals from the leaders. Next, power to call for information. I'm coming and saying that, Rahul, if my assessing officer wants certain information, if my assessing officer wants certain information which may not be available with me but would like to verify it from another person, that can also be requested for. So they come and say his income tax authority has the power to call for information from any other persons also, as he may deem fit. He can request from any other person also such powers, such information for the purpose of completing my assessment. Yes. Next, power to survey. This is something which you need to keep in mind, people, from an exam perspective. Mark this as important and read this properly. This provision comes and says that any income tax authorities has the power to do a survey on you, but he will be able to do the survey within his jurisdiction or area limits within which the business or profession is carried on. Meaning he will have to do a survey only in the location where he is authorized for. During such inspection, he can look for books of accounts. He can place identification marks on your books of accounts and make certain copies out of it. Impound and retain the books of accounts after recording the reasons to do so. But please notice that he can only do so for a period of 15 days. If he wants to do it after the period of 15 days, he will have to get an approval from his leaders. Leaders being the PCCIT, CCIT, PCIT and CIT. Yes, which means impoundings are permitted in a survey, but it can only be done after taking an approval for beyond 15 days. Then he can check or verify cash, stock or other valuables, make inventory of any cash, stock, valuable or articles. Please understand, people, for any kind of assets, he can only make an inventory on it. He cannot impound it. Please keep this thing in mind. This has been tested multiple times, so please be careful about it. Next, last item, he can record statements of any person, meaning he can come and ask you to examine something on oath. During survey, people, this is the exam question which is coming in exam multiple times. If you have a survey, the survey has to be done only during such period. If the survey is happening in a place of business, then it can only be done during the conduct of the business. In case you get an exam question where it comes and says that there is a movie theater, where they would like to do a survey, and the movie theater is only open between 10 p.m. to 3 a.m. He can only come and do a survey between such period of 10 p.m. to 3 a.m. He cannot come and request you that you have to come in early just because the survey is happening. Which means he has to satisfy your timings in order to get a survey done. Understand it, at the end of the day, it's a survey, people. Yes, he can only come for verification. He's not coming for impounding anything. So therefore, survey, he can only come during your business hours. Second, if the survey is happening on any function, he cannot ask the function to be stopped just for doing the survey. He'll have to wait till the survey function is completed. He'll have to wait for the function to be completed. If it is any other place, meaning it's not the business, meaning you're coming to your house and all, you can come in after sunrise, but only before sunset. During your after sunrise, before sunset is when you can do a survey. Anything after that is not permitted. Yes, please understand, this whole provision is only for entry and not for exit. Meaning once he enters your premises, he can stay for any number of times. He does not matter. He can in fact stay there for another week also. It's perfectly fine. He should have just promised to come properly on the entry day. This is what you need to keep in mind. Now, when a survey is happening, the survey has to happen after getting an approval from their seniors. You cannot do a survey just like that. The seniors are being informed as PCCIT or CCIT or any kind of PDGIT or DGIT for getting a survey done. These people have to be informed prior, got an approval, then only you can do a survey. Please keep that in mind. Next, if in case it's a tedious survey, then in the tedious survey he can only come after sunrise and before sunset. Any times before and after will not be taken into consideration. Meaning for tedious surveys, he can actually come to you in the morning also, even if your hospital is working late night. That is also permitted. Yes, survey question, please be bearing in mind. One exam question is there in your study material. Please go through the survey question. Yes. Next, power to call for information is simply coming and saying that I can again call for information from various other people after getting approvals. Not important. Power to call and verify for information, 133C. If I have some information in my possession, I can be asked to call upon and give some clarification on the information. Then power to impact registers of books of companies. I'm coming and saying if you have a company and you have a register, the officers can come and request for inspecting this registers in order to check for genuineness and everything. Last, power to introduce faceless assessment. This is more of a clarificatory thing where they came and said that I'm giving powers to my income tax department in order to issue any kind of faceless assessment procedures in order to do more clarity, less corruption and all those things. Yes, again, these things are not being tested in exam. Don't worry about it. This is more theoretical. Moving on to the assessment procedure, people. In case of assessment procedure, you are coming and informing that, boss, if you want to do an assessment, first of all, you should issue a notice. The issue of notice will happen under section 143.2. Under section 143.2, 143.2 will issue a notice. But even before you do a notice, the moment a return is filed, first thing which needs to happen is that a summary assessment has to take place. Income tax comes and says that first an intimation has to be granted under section 143.1 by the assessing officers or by the CP Civing. Coming and clarifying how does the summary assessment work. In the summary assessment, the following changes can be made. The following changes can be made. They can make any arithmetical error changes, any incorrect claim changes, disallowance of losses if the return is filed beyond the due dates, any kind of disallowance or expenditure or increase in income which is indicated in audit report but has not been taken while consideration, any kind of disallowance of deduction under 10AA if the return is filed beyond the due date. Meaning simple, straightforward things which are not going to be asking any interpretational challenges. That can be done in 143.1. That can be done in 143.1. Please understand, for any returns after assessment year 18-19, no changes can be done in 143.1 if for any adjustment in income. Meaning, if my 26 years is showing more income than my financial statements, you cannot come and tell me that no, Rahul, I should be adding this in income after 18-19. That is not permitted. That is not permitted. You will have to go and check for reasons why there is a difference. Why there is a difference. During a 143.1, intimation has to be given to the assessee for giving a response within 30 days. Any responses has to be duly considered by the assessing officer in order to make some changes and make some modifications. If the same is not considered, then it can be invalid. It can be invalid. If no response is coming within 30 days, they can assume that the assessee has agreed to it and adjustment can be carried forward. Yes, all returns, after the returns are processed, an intimation has to be sent specifying the amount of refund due or the demand payable This is all mandatory. Where no adjustment is required, they can come and say that a return file itself can be deemed as an intimation, but in a practical world, you will definitely get an intimation for any case, even if the return has no adjustments. More important and critical for you, intimation has to be given within 9 months from the end of the financial year in which the return is filed. If the intimation is not coming within 9 months, then the intimation itself becomes valid. Any adjustments made in the intimation will also be treated as invalid. What is the 9 months, people? You're looking from 31st March plus 9 months will become 31st December. So till 31st December of your next year after assessment year, you will have to get an intimation. If you get an intimation, then you will be able to get the adjustments. Otherwise, there will be no adjustments happening from assessing officer level. Yes. Next, intimation has happened, Rahul. Now the officer is proposing that he wants to do an assessment on you. He will have to do an assessment under section 143.2. 143.2 comes and says that you have to issue a notice for scrutiny assessment to the assessee for requesting that you have informed that the assessee has understated the income, assessee has taken more losses, or assessee has underpaid any taxes. Understand, all these things are coming and clarifying that the assessee should not be getting any benefits. The assessing officer should be getting benefits. Yes. So which means the notice can only be issued in case it's going to be department friendly. This notice has to be issued within 3 months from the end of the financial year, which means 31st March kapron, they have to issue it within 3 months, which is 30th June. Within 30th June, you'll have to issue the notice. Agreed, not agreed? Yes. Now, during your assessment procedure, people, the following things can happen from the previous page. First is called 142.1. Where you can raise an inquiry on you. Which means they can come and say that wherein return has been filed, the assessing officer can issue a notice requiring to furnish the return of the, requiring to inform on the books of accounts. Any kind of information which may require AO in writing, including the details of assets and liabilities, anything can be requested out of you. But in case they're asking for books of accounts, they can call it only for the last 3 years prior to the year in which the assessment is picked up. Unless and until it's a survey case. Search case, in which case you can give prior also for 6 years and all those things. Yes. Next, in case during the assessment proceedings you find that the data is very complicated, the assessing officer may request for a special audit. Yes, that is called as section 142.2a, 2b, 2c and 2d. Please mark this as important. This has come in exam multiple times, so you have to note this carefully. This provision comes and says that at any stage, if the assessing officer feels that the accounts of the accounts of the assessee can be audited again, or the inventory which is valued by a CMA, needs to be done in order to get the right valuation, he can request for such special audits. But such special audits will only be taken into consideration after giving the assessee an opportunity of being heard. Yes, the following can be reasons for directing a special audit or an inventory valuation. By the nature and complexity of the accounts is high, the volume of the accounts is high, there is doubt about the correctness of the accounts, there is multiplicity of the transaction, and the nature of the business is very specialized that the assessing officer may not be able to understand it. In all these cases, you can request for a special audit or an inventory valuation. Any kind of inventory valuation or special audit has to be done after getting a prior approval. CMA should be appointed by the manager of you, you meaning assessing officer, which means again it is PCCIT, CCIT, PCIT and CIT. These 4 people will have to appoint the special auditor for you, and the remuneration show fixed shall be paid by the central government. One of the exam questions came and said that the special audit was undertaken and the payment was being requested from the assessee. You will come and say this contention is invalid because special audit was directed by the assessing officer. The payment also has to be happening by the assessing officer. Yes. A special audit or inventory valuation can also be undertaken if it is already done earlier. Can an assessee come and object that I have already done an audit from another CA, I would not like to do it again? Answer is no. Answer is no, because understand that CA was yours. That CA was yours. Assessing officer is now proposing a different CA. He can request for a special audit on this. He can request for a special audit on this. That will be perfectly valid. Yes. Next, any kind of audit report, inventory value report has to be submitted within the time limit specified by the AO or such extended time. However, the total time cannot exceed 180 days. The total time cannot be exceeding 180 days. Maximum 180 days can be taken for the completion of audit. In case the books of accounts are not getting audited, meaning you are not supporting the CA to get your books audited, you will be liable for best judgment assessment and also imposing a penalty of 10,000 rupees for not complying with the law. Finally, if there is any failure on the part of the CA to furnish the audit report, it should not be holding assessee as liable because the CA has made the default. In which case the PCCIT, the PCIT, the CIT or the CCIT can request for a different CA to undertake the audit. That's what the Supreme Court decision comes and clarifies to you. Yes. Apart from this, if you want to do a valuation of something else, income tax also permit for you to get a valuation officer. Yes. So they say an assessing officer can make a reference to a valuation officer estimating the total value, including FMV of all the assets, properties or investment for the purpose of assessment or reassessment. The AO can make a reference whether or not he is satisfied about the correctness or completeness, meaning it does not matter even if the AO is not satisfied by the completeness. If he thinks a valuation is required, he can get so done. The valuation officer so appointed shall estimate the value of the asset after considering the evidences gathered by him. If assessee does not cooperate, valuation officer can estimate the value to the best of his judgment. VO has to submit all the reports to the assessee within 6 months, to the assessing officer and the assessee within 6 months from the end of the month in which the reference was made. AO can take into account such report in assessment or reassessment after giving assessee an opportunity of being heard. Now, if you complete all these things, people, all inquiries and all is done, at this stage is when income tax officer will have to pass an assessment order. So we'll move to section 143.3. This section 143.3 comes and clarifies that if at all an assessing officer is satisfied with all the data which he has, he can now pass an order in writing. Which is confirming the total income and the demand payable by the assessee, or loss estimated, or the refund due. These assessment orders for assessment in 2021 will have to be passed within 18 months, which will become 30th September 2022. Rahul, this due date is not falling within your financial year. Yes, but understand, if this case was liable for TP, an additional 12 months will get added, which means the due date now becomes 30th September 23, which falls within your exam period. Therefore, this is also important. Yes. Next, in case the return is furnished for 21-22 and onwards, then they said it is 9 months. Which is 30th December 22 plus another 12 months in case of TP, which will become 31st December 23, which again falls within your financial year. And finally, the amendment of the current year, which comes and clarifies any assessment order between 22-23 and onwards. The due date has now become 12 months. Which means it becomes 31st March 24 and forwards, with an additional 12 months in case you're going for TP cases. Please bear that in mind. Where any return is filed and an updated return is issued, for this, when an updated return is filed, income tax officer will get an additional 12 months in order to complete the assessment for the updated return income. Is the amendment in the bottom. Yes. Next, they're coming and saying, in case there is any trust which is eligible for exemption under 1023C or 12AB, and the officer feels that the exemption should not be granted, officer cannot deny the exemption to you as it is. He will have to write an application to the PCIT or the CIT informing the reasons why he feels that the exemption should be denied. This PCIT will take the recommendation in mind and then decide whether he wants to withdraw the exemption or not. If he decides to withdraw the exemption, he will inform it to the assessee that I am withdrawing the exemption and I am not granting this anymore. Based on that withdrawal letter is when assessing officer can complete an assessment. Meaning, in an exam question, if you get a question which comes and says that the assessing officer is proposing to voluntarily make a registration cancellation, you will have to say that the proposal is invalid. You cannot do so unless and until PCIT has first rejected or cancelled the registration. That's what this point comes and clarifies to you. Yes. Next, in case the assessee was requested for information and the assessee is not complying with you, he's not filing his return, he's not supporting with the data, he's not giving you any information, he's not requested for valuation. I'm requesting for valuation, I'm requesting for special audits. For nothing he's cooperating. Income tax says in that case, assessing officer will now have the power to make a best judgment assessment. Meaning he can make an assessment to the best of his ability and skills. The rule is very simple. When you have a best judgment assessment going on, assessing officer can never propose a refund due. can never propose a refund you. He can never propose a loss or a refund you. He will mandatory have to make an income statement. He'll have to mandatory make an income statement, because they're coming and saying, since the assessee has not been compliant, assessing officer will not be nice to you. Will not be nice to you. He will mandatory have to ensure that there is a income tax payable as per the best judgment. As per the best judgment. Yes, although whenever a best judgment happens, you cannot just like that do a best judgment. You will have to grant an opportunity of being heard. Same model. You have to get a grant of opportunity of being heard, request for a show cause notice, and come and understand why the person should not be granted under 144. If the reasons are valid, you will continue with normal assessment. If the reasons is not valid, you will go for best judgment. Second, in case no refund is granted, in case any kind of best judgment is taken, no refund can be granted under this. Time limit for passing a best judgment assessment will be the same as 143.3. Will be same as 143.3. Meaning for 2021 it is 18 months. For 21-22 it is 12 months. From 22-23 onwards it is, sorry, for 21-22 it is 9 months, and for 22-23 onwards it becomes 12 months. It becomes 12 months. Now, best judgment assessment does not mean that the AO can make an arbitrary disallowance, people. It means that he has to do best judgment to the best of his abilities. To the best of his abilities. Any modification made has to be based on information and evidence is collected. Based on information and evidence is collected. He cannot simply like come and say, I want to tax everything. It's not how it works. You'll have to give a reason for it. You'll have to give a reason for it. Yes, you can ignore 144A. It is not important. You can also ignore faceless assessment, people. Not very critical from exam purposes. Not very critical from exam purposes. You can choose to let it go. If you understand the normal process of assessment, the only difference which you will have is every time you have an assessment. Every time you have an assessment, in the normal process, you'll have an assessing officer. In an faceless cases, you will have someone called as National Faceless Assessment Center. National Faceless Assessment Center, meaning instead of assessing officer, Faceless Assessment Center will take care of everything for you. And in the background of Faceless Assessment Center, they will have different units: the technical unit, the assessment unit, and the valuation unit. Which they will interact with each other. Assessee has nothing to do with such things. Assessee will only report directly to the National Faceless Assessment Center. Yeah, that is what the process is. If you understand that much, that is enough. Can we go forward? Yes, let's move on forward to the reassessment procedure. A critical topic for your attempt, people, because after this attempt, the procedure has changed. So therefore, please pay attention to this. Reassessment procedure comes and says that where under section 147, if any income has escaped assessment, assessing officer may assess or reassess such income, recompute the losses, depreciation allowance, or any other allowances or deduction for the purpose of such assessment here. Any other income which has escaped assessment which comes to his notice subsequently in the course of proceedings. Which means if you get an exam question where they come and say that the assessing officer proposed a disallowance under 40I. During reassessment procedure, he also felt that he has to make a disallowance under 43B. Can he do so? Answer is yes. Point number B gives you the validity that you can make a disallowance beyond what is there in the reassessment also. Yes or no? Yes. Second, how do you decide that the income has escaped assessment? Income tax says information which the AO suggests that income assessment escaped assessment is after the information has been flagged in case of the assessee in accordance with the risk management strategy formulated by CBDT. Meaning CBDT has done a risk management strategy. Under that, it was felt that you are escaping assessment. Second, any audit objection has been received for the purpose of the relevant year, which comes and clarifies that the provisions have not been satisfied. Till last year, before these provisions were into picture, audit objections were not granted as an perfect mode of escaped assessment. But with the amendments of the latest years, they are coming and saying even audit objections can be a valid reason for escaping assessment. Third, any information received under an agreement referred to in 1991, which is your double taxation agreements. Any foreign counterparties have come and confirmed that there is an income escaping assessment for you, in which case also they can do a reassessment procedure. Point number 4, any information made available to the assessing officer under faceless collection of information, meaning a faceless procedure was done on someone else, and based on that I found out that you may also have income escaped assessment. They can tax you also under 147. Finally, any kind of information which is received in consequence of an order of tribunal or a high court. Tribunal or high court has come and confirmed saying that you have escaped some assessment, so therefore I am issuing a reassessment notice on you. Perfectly valid. Please be mindful about the fact that an income which has already been subject to the provisions of appeal, reference, revision cannot be reassessed under 147. Meaning if a case is already decided by the CIT earlier, for the same case, assessing officer cannot issue a reassessment. For any different reasons he can do so. But for the same reason and for the same amount, he cannot come and request for a reassessment procedure, because higher authorities have already granted it in your favor. Yes. Now, how does a reassessment happen, people? Income tax comes and says, before even you undertake a reassessment, assessing officer will have to do the following 4 steps. First thing, he'll have to conduct an inquiry on you. with the prior approval of specified authority with respect to the information suggesting that the income chargeable to taxes escaped assessment, which means he'll have to do an inquiry on you and come and ask you to prove that the income has charged escapement or not. You, during inquiry, will be given an opportunity of being heard after getting a prior approval from specified authority, specifying upon him a notice to show cause why you should not be passed an order for doing reassessment. Why you should not be passed an order for doing reassessment. This notice will be valid for a period of 7 days to 30 days or such extended time. In such notice, they'll come and ask you why they should not be doing an 147 reassessment to you. Based on this notice, you'll be asked to give a reply. You'll be asked to give a reply to confirm why you should not be doing a reassessment, and taking on the reply in consideration, the assessing officer will now have to pass an order. Under section 148 confirming that yes, I would like to proceed with reassessment, or no, I would not like to proceed with reassessment. Under 148A, if he decides that he wants to proceed with the reassessment, he will now come back to you, request you that you have to file a new return under reassessment, and then start the normal 147 process. This is what they come and confirm. Yes. Now, how do you issue a notice under section 148? How do you issue a notice under section 148? The income tax comes and says that if you want to issue a notice under section 147, he will have to require him to file a return. Within 3 months from the end of the month in which the notice is issued. Which means when I issue you a 148 order, I will come and ask you that now after within 148, I will now issue a notice to you under section 148 coming and confirming that I'm going to reopen your assessment, but for me to reopen the assessment, I will have to ask you to file a return. This notice will be issued within 3 months from the end of the month in which the notice is issued, or such further period as may be allowed. In case of delay, the return furnished shall not be deemed to be a return under section 139, which means they may come and say that you have filed a belated return, and any extra tax payable will now become liable for 234A, 234B and 234C as well. 234A, 234B and 234C as well. Please be mindful about that. Yes. Now, they are coming and clarifying that no notice shall be issued unless there is an information with the AO which suggests that the income chargeable to tax has escaped assessment in case of assessee for relevant year, and the assessing officer has obtained a prior approval from specified authorities to do so. Meaning, 148 notice can be issued only if you have information which comes and confirms that you have escaped assessment, which is done by 148A. Meaning, if you have already done a 148A, that itself is a valid ground to come and say that yes, the income has escaped assessment. But please understand, this approval will not be required. In case you have materials available and record through faceless collection of information, including reply that it is a fiscate for notice. Meaning, faceless proceeding, I found out that yes, you have escaped assessment because the other person has confirmed it to you. In which case I don't have a problem. I will not have to get any special approvals and all. I will confirm that yes, the income has escaped assessment, and therefore will become liable for taxes. Yes. So what we were discussing is we were coming and telling that when you have a 148 order issued to you, you will have to request the assessee to give him a return of income within 3 months from the end of the month in which the notice is issued. Now, here is where the question is, Rahul, when do you have to issue the notice under 148 itself? Income tax says that the notice under section 148 has to be issued within 3 years from the end of the relevant assessment year. Meaning, if my assessment year is 2021, I will have to issue the 148 order by 31st March 24. Please understand that the notice under 148 has to be issued within 31st March 24, meaning the 148A process, the inquiry, the getting the order, the returns and everything, all has to be done before that. So you have to complete all your process before that. However, income tax comes and clarifies, if the AO has in his possession any kind of information which comes and proves that the income chargeable to tax has escaped assessment for more than 50 lakhs for that year, the date already increases to 10 years. The due date already increases to 10 years, where it was 3 years for normal cases, it is 10 years for the exceptional cases. That is what the provisions come and clarify to you. Yes or no? Yes, keep that in mind. Next. This is a thing for you to keep in mind. It's more of an evidence reference. You can look at this information. Yes. Now, income tax is also coming and telling that, boss, at a certain point of time, if at all you were proposing to issue a 148A, and the period after excluding all such periods, does not even have 7 days. The notice will automatically be extended for another 7 days. Meaning, I'm giving you 7 days time for you to issue the 148 order, a 148 notice. Please do so in that such time. Please do so in such time. 7 days extra time will be given to you if you don't have 7 days after the 148A order was passed. After the 148A order was passed. Are you clear? Yes, yes, great. Let's move forward. Then I'm coming and saying that, Rahul, time limits which are given to you, the time limits which are given to you will not be applying in such following cases. In such following cases, the provisions come and say, if the reassessment is done to carry out to give effect any findings of the order passed by an authority in appeal. So it means an appellate authority has been passed where they're coming and confirming that the income should not have been taxed in this year but should have been taxed in other years. To tax it in the other years, the assessing officer will have to pass an order, correct? And for which he'll have to do a reassessment procedure. For that reassessment procedure, income tax says before even the appeal started, on the date when you were supposed to file an appeal, if that date the reassessment could have been opened, then the order is valid. In simple words, the date of filing the appeal to the date when the order is closed, till the date when the appeal order is closed, that period will be removed from the limitation period. If on that date of filing of appeal I was eligible to file the eligible to reopen assessment, then I will be eligible to reopen the assessment after appeal also. But if the expiry had already happened, then I will not be eligible to reassess it. An example which is given to you, you can take a pause and you can look through the example to make a better understanding. Yes or no? Yes, great. Let's move on forward, people. What is the time limit for completing your reassessment? It's the same as 143.3. Which means they come and say the date when I issue the notice under section 148, from that date I will have to give you an additional 12 months. Within 12 months, you'll have to complete the reassessment order. If you have liable for TP, then you will get an additional 12 more months, which means it overall becomes 24 months. For completing this whole reassessment process, they have come and informed you the period of they have come and informed you who's the specified authorities. They're coming and saying if you want to issue an order, if you want to issue a notice under 148 before 3 years, meaning for the 3 years period, then it is to be done by PCIT or CIT or PDIT or DIT. But if you want to do it anywhere beyond 3 years, meaning if you're coming and saying the liability is more than 50 lakhs, in which case you want to do it for more than 3 years but less than 10 years, in that case you will have to get an approval from PCCIT, CIT or PDGIT and DGIT, the boss of these people. This is what the provisions are coming and clarifying to you. Yes, next thing which 142 once comes and clarifies, that when it comes to 142, you can drop the reassessment. In case there is no impact in the income, loss or tax, even if the income escaping assessment will be considered. Meaning, even after doing the income escaping assessment, if you find that there is not going to be any difference in tax payable, you can drop the reassessment. And second, he has not filed an appeal or revision petition against the original assessment order. He has not filed the reassessment procedure against the original assessment order. In that case, I don't have to take forward for the reassessment. Yes, once you're done with the reassessment procedure, people, after you have the order in your hand, whether it's original or reassessment, it doesn't matter. If you have an order in hand and if you find that the order has some mistakes apparent from record, either you can yourself or IT authority can suo moto, pass an order under section 154 confirming the changes to be made, by correcting the mistakes apparent from record. Such a suo moto cannot be done beyond 4 years from the end of the financial year in which the order sought to be rectified is passed. Meaning, if I'm passing the order today, from this year's end, 4 years more I'm going to give you. Within such period, you can pass a rectification order. Anytime after that, no rectifications can be passed. Second, any rectification to be done by the assessee will have to file the application within 4 years from the end of the financial year. Meaning, if I file an application within 4 years, then I will be taken up for rectification, after which assessing officer may pass it at any point of time. Yes, but I will have to satisfy the 4 years condition from my side. If the assessing officer delays it after that, then I am not being held responsible. My rectification should still be taken into consideration. Point number 3, they're coming and saying every order passed under section 154 is a new order. Meaning, if you want to rectify the rectification order, you can definitely do so for a next 4 years period. What are mistakes apparent from record? They're coming and clarifying mistakes which are glaring, obvious, patent or self-evident. Examples like mistakes of facts, omitting a number or disallowance, any kind of mistakes due to subsequent interpretations of law by the Supreme Court. Supreme Court has changed the interpretation. That is a mistake apparent from record. Any retrospective amendment of the law. All these are called as mistakes apparent from record. They will take into consideration. However, if you find that any kind of mistake is going to take a long drawn process of reasoning, examination or arguments, there may be interpretational differences. In that case, it cannot be called as a mistake apparent from record. You will not take it into consideration. Second, any kind of change in opinion on the officer's position. Yes, there was one officer which first came and said it is allowed. Second officer is saying it is not allowed. That cannot be a mistake apparent from record. That has to be reopened in a reassessment procedure. Yes or no? Yes. Let's move forward. I'm coming and saying once an appeal against an assessment order is decided, the order of appellate authority merges with the assessment order. Hence, the limitation period of 4 years under section 154 to be counted afresh from the date of appellate authority. Yes, this case law is coming and saying that today I filed an order. Today I have an order. I filed an appeal for that order. I filed an appeal for that order. Order came to me. After which I've got a giving effect order. From that giving effect order, will the 4 years start or will it start from the original order? Income tax case law comes and clarifies that it will start from the giving effect order date, because that date you got a new order in hand. And from that date you can start a fresh order. Although please bear in mind that when you come to section 154, if there is a mistake apparent from record which is going to cause harm to the assessee, in that case you cannot pass an order without granting an assessee an opportunity of being heard. Please bear in mind that in this whole chapter, wherever you see this word where something is going to go wrong against the assessee, do not make a decision unless you get a reasonable opportunity of being heard. That's a standard line you can use in any question. But please ensure that you only do it in case you find that the assessee is not being treated fairly. Yes, next, notice of demand. Income tax comes and says wherever you want to raise any demand by tax, interest, penalty and anything, a notice of demand has to mandatory be given to the assessee in order to grant the demand payable. If the demand notice has not been given, then the demand will become void. Void. Such notice will be granting you an additional time for 30 days to make the payment of the demand. Additional time of 30 days to make the payment of demand. If after 30 days also you don't make the payment of demand, as income tax officer will now make you liable for an interest under section 220 at the rate of 1% per month or part thereof. That is what will happen under the demand notice. What is the consequences of not paying the demand? You will get a recovery proceedings initiated on you. You will have an interest coming under section 220 for 1% per month. Assessing officer may also treat you as an assessee in default, thereby levying penalty under section 221. Yes, in case there is a demand which is subsequently enhanced, again, assessing officer is proposing to increase the demand. It is going against the assessee, in which case you can do so provided you grant an additional opportunity of being heard. At a later stage, if there is an appeal going on or rectification going on because of which the demand is going to come down, the assessing officer will have to propose a new demand order to you, clarifying how much is the revised demand on you. That also has to be taken into consideration. Point number 3, assessing officer has the time and the powers to extend the due date beyond 30 days if at all he feels that the reason are genuine. In fact, assessing officer also has the power to waive the penalty if they find that the reasons are genuine for not paying the demand on time. And finally, interest can be also reduced and waived by the PCCIT, CCIT, PCIT and CIT by an order in writing on an application made by the assessee clarifying why he would not like to pay the interest. Look at the case law. The case law comes and says merely raising a dispute before an authority like MAP cannot be a valid ground for not levying interest or waiving the same. The levy of interest such as is mandatory and can be waived off only in case of genuine hardships to pay the demand. Coming and telling that I've already filed a mutual agreement procedure with a different authority and I want the interest to be waived because that looks like a genuine reason is not the case. You could have paid the demand properly. And later on requested for an MAP and got a refund back. That cannot be a reason for you to not be levying interest. The interest will still be levied. Are you clear? Yes. Some timeless for you to keep in mind, people. If at all you have passed an order from ITAT and you have to give a giving effect order to it, then you have to pass the order within 12 months from the end of the financial year in which the order is received. In case the order is passed by the CIT or PCIT under a revision proceedings, then the order has to be passed within 12 months from the end of the financial year in which the order is received. In case there is any kind of giving effect order to be given for any CIT, ITAT appeals and all those things, I will ask a simple question. Is it going to take verification and all? If you say yes, then it is going to be 3 months from the end, it's going to be 12 months from the end of the financial year in which the order has to be received. But if there is no verification to be done, but it's a simple straightforward giving effect, then in that case you have to pass the order within 3 months from the end of the month. It is to be passed within 3 months from the end of the month. The box very clearly comes and clarifies to you have to take it from the month and not from the financial year. Yes, last things and all, you don't need to worry about it. You can ignore it and go. Comes forward to the most important part of this topics, people. We are looking at something called a search, seizure and raids. Income tax comes and says who can do a search, seizure and raid. They can be done by a PDGIT, DGIT, PCCIT, CCIT, PDIT, DIT, PCIT and CIT, or any other additional DIT, DIT, additional CIT and JCIT as are empowered by the board to do so. Meaning last category of person cannot do it just like that. They will have to get a board approval for it. Now how does the search and requisition happens? They are coming and saying a search and requisition will happen as follows. Will be authorized only if the IT authority based on information in its possession has reason to believe that the person to whom the summon or the notice under section 142(1) was issued but he omitted to fail to produce, has been issued but does not produce, might be issued but he will still not produce. Meaning I'm coming and saying had I gone to him and I would have requested information, he would have not given it. He would have not given it. Then I will be authorized to do a search on him directly. I would be authorized to do a search on him directly. Person is in possession of any undisclosed valuable articles or thing, including money, bullions, or jewelry, etc. Including money, bullions, or jewelry, etc. I am coming and saying, if you have some valuable articles in your hand which come and looks like it is escaping assessment, in that case I can do a search seizure on you. Yes, all the kind of reasons has to be recorded in by IT authorities, has to be recorded in by the IT authorities, but should not be disclosed to any persons. Should not be disclosed to any persons. Income tax is clarifying, I do not have to disclose it. As long as I've recorded it, is good enough. It is good enough. Second, mere intimation to IT authority by any other agency like CBI, etc., that the assessee possesses money which according to them is undisclosed does not constitute information on the basis of which they can do a search warrant. Yes, CBI and all coming and informing you that yes, there might be money with someone else cannot be called as an information for you to do a search seizure. You need to have actual evidences in your possession, in your hand, which comes and clarifies that this is what is happening. This is what is happening. Yes or no? Yes. Next, Rahul, how does an authorized officer do a search? They come and say that when he enters your premises, he can enter and seize any building or place of vehicle, vessel, or aircraft where he has reasons to suspect that the books, valuable articles are kept. Meaning he can enter and he can seize everything which he feels are important and can be escaping assessment. He may also place identification marks on such and make note of inventories for these purposes. Place identification marks and make inventory of these. Exception, any valuables which is in stock in trade of the business cannot be seized. He can only make a note of inventory on this. Meaning other assets like jewelry and everything can be fully seized, but if it's a stock in trade, you cannot seize it. You will have to make inventory notes on it. You have to make inventory notes on it. Next, any kind of searching any building, place, vessel, aircraft, even if the same is outside its jurisdiction or not specified in search warrant. If I find out that yes, in my jurisdiction sits your office, but you may also have kept some assets in your house. You may also kept assets in your house. I may definitely go to the house also and do a search on you. May do a search on you. Third, inspect books, documents maintained in electronic form by obtaining necessary facility from the person in control of the same. I can inspect all your books of accounts maintained with you, whether it is electronic or it is not electronic, I don't care. Power to break open any locks if the key is not available. If the key is not available, meaning if I come and ask you to open a lock and if you don't choose to open the lock, I have the power to now open the lock also myself. I have the power to open the lock also myself. Then search any person in whose possession the person has got out or is able to get into the place where the search has been authorized. Meaning if some random person comes and enters the premises, random person comes and enters the premises, I can now search him also. In fact, I can ask him to stay back. I can ask him to not leave the place. until the assessment search gets over. These are the kind of powers I'm granting to you, an arbitrary set of powers giving all kinds of benefits. Notice the lines carefully. It comes and says, person from whom books or documents have been seized can take a copy or extract of the same if he so desires. However, the original will remain in the custody of the authorized officer. Meaning when I do a search, original books will move to me. Will move to the authorized officer. The copies of the same will be remaining with the assessee. This is exactly ulta in survey, people. In survey, what will happen? They will take a note of the items. But in search, they will take away the original itself. You can keep the notes with you. Yes. Second, deemed seizure or restraint order, where it is not possible or practical to take the physical possession of any valuable articles or things due to its volume, weight, or other physical characteristics. The authorized officer may serve an order confirming that you should not remove or part away with these assets. Without my prior permission. Meaning, I can take one of the rooms of the assessee and I can come and say, I will keep all the assets here. These assets should not be removed from this place without my express approvals. Second thing is called as prohibitory order, where it comes and says where it is not practical to seize books of accounts, documents, or anything because of any other reasons. The authorized officer may authorize the search order on the owner or the person in immediate possession to not remove or part with the assets without the prior officer permission. Understand, when it comes to your books of accounts, there can only be a prohibitory order, but when it comes to assets, it can be a prohibitory order or it can be a restraint order. Either of the two can work. When it's a prohibitory order, you have 60 days time limit in order to keep it valid. After 60 days, the assessee can do whatever he wants with the order. He can do whatever he wants with the books of accounts and the assets. When it comes to restraint order, there is no limit. Restraint order, you can do anything you want with it. But if it's a prohibitory order, you get only 60 days in order to make your decisions. If you don't do any decisions in 60 days, assessee can use the assets after that. Yes, after the assets have been seized, the books have been seized, the authorized officer are now required to submit all these things to the authorized officer who may have jurisdiction over the assessee in case the assets are not his. Meaning if at all I've done a search on a person and I found out that the assets may not be pertaining to this person but may rather be pertaining to another person, I can come and ask the authorized officer to transfer the books of accounts to the other person so that they can do assessment on him also. Provisional attachment of property comes and says that authorized officer, in order to protect the interest, in case he thinks that the tax payable will be huge, and the assets which have seized will not be enough, he can attach any property of the assessee during the course of the search and seizure, and within a period of 60 days, he can, after getting an approval, he can restrain all these assets. Meaning even though they are genuine assets, if I feel that the assets are important in order to collect my taxes back, I can ask for a provisional attachment of those assets as well. Such provisional attachment will remain valid for a period of 6 months from the due date in which the order was provisionally attached, In case required, an assessing officer can also make a reference to valuation officer, the same guidelines as section 143.3. And in case of a requisition of books of accounts where a search has been conducted by any authority of law such as customs, GST, FEMA, etc., and the books of accounts have been seized by such authorities, then the PCCIT, CCIT, PCIT or CIT can require such officer or any other law to deliver such books of accounts to the requisitioning officer of income tax as well. Meaning if someone else has done a raid and in that case they found out some books of accounts which can come and say that the income tax has been avoided, then they can transfer all the assets to me and the books of accounts to me as well in order to complete my assessment. Now, during such process, if at all it so happens that the person is finding out cases, the person has found assets, the person has found books and everything, but the assessee which is standing in the place is coming and denying all the claims, saying it is not mine, Here is where it comes to the rescue section 292C, which comes and says that during the course of search, any books of accounts seized, any valuable articles taken, any jewelry which is there is found in the possession of the person during survey, it will be presumed that it belongs to this person only. Even if we may come and say that it is not mine. Second, contents of such books of accounts are presumed to be true, meaning they may come and say, Rahul, the books data is wrong. I will say it is true because it is in the possession of me. Signature and every other part of the book which purports to his handwriting will be presumed to be his handwriting. He may come and say that, sir, my handwriting is forged, I have not done it. He will say, no, it looks like your handwriting, I will presume it is your handwriting. Next, any attestation, execution of stamp of the authority will be presumed to be done by him, meaning they come and find that there is some stamp and everything done. It will be assumed that this person only has done it. And next, if such books of accounts, assets or documents were delivered to the requisition officer, it is presumed that it was taken in custody from the possession and control of that person. Meaning I will come and say that I took it from this person and then only gave it to the authorized officer. You cannot come and deny that it was not in your possession itself. These will all be presumed. Yes. Sweet. Now that you have completed your search process, the assets are seized. The authorized officer will take all the assets, take all the books of accounts, take everything in his possession, and then transfer it to the assessing officer. Assessing officer in order to undertake an assessment. Income tax came and clarified that after 1st April 2021, the search process will be the same as assessment process. Reassessment process. The search process will be same as reassessment process, meaning you will undertake the same provisions of section 148A and section 148, except for the following cases. They are coming and saying in the following cases, it shall be deemed that the assessing officer has information available for escaping assessment for the last 3 assessment years, and all the 3 last assessment years will be open just like that. In case there is any search which is taken after 1st April 21, any assessing officer is satisfied with the prior approval that the money, bullions and all are search and requisite belongs to the assessee. Third, any kind of AO is satisfied that the books of accounts which are relating to the assessee. In all these 3 cases, even if there is no income escaping assessment, I will presume that the income has escaped assessment and I will launch reassessment for the last 3 years. Please bear in mind that for all these search cases and all, 148 is not applied. 148A is not applicable, meaning I don't need to undertake any inquiry, any notice, any order, nothing. Directly I will come and say that boss, search is undertaken on you. 147 has to be issued, which means file the return and directly proceed. No inquiry, no conduct of search and no nothing. It is assumed that the income has escaped assessment directly. 148A provisions will not apply. Yes. Next, in case of inquiry, assessing officer shall not be required to carry out any inquiry or issue any order under section 148A. Like I said earlier. Additionally, if the search requisition is conducted after 15th March of a financial year, and the time limit to issue the notice under 148 expires on 31st March, then an additional 15 days shall be granted to the AO for issuing notice under 148, and such notice will be issued as if it was issued on 31st March. This was more of a safety measure given in the current year because people were not able to complete their survey process, search process, and then issue a notice. So they came and clarified saying if the search is happening and completing by the 15th March of that year, then you will be given an additional 15 days after 31st March also to issue the notice under 148A to comply your loss. That is what the provisions are coming and saying. In case of survey, it is coming and clarifying to you that though it is deemed that the income has escaped assessment for the last 3 years, assessing officer will be required to conduct an inquiry, because understand this is a survey, this is not a search, this is a survey and not a search. So reassessment procedure will have to be done only after satisfying section 148A. However, they're coming and clarifying that if at all there is any survey which is completed on 15th March afterwards, you'll be given an extended 15 days after 31st March also, in order to issue the notice under 148 and get the reassessment procedure done. I'm going to hold for a minute. You will have the example on the board. If you want, you can pause and you can look at the example to understand this better. Yes, after this, the same process will happen, people, because you've issued a 148A, you will have to issue an assessment order within a period of 12 months from the date of issue of notice. 12 months within the date of issue of notice. Any order passed will not be passed by an AO below the rank of JCIT except with the prior approval of the JCIT or JDIT. You will have to get their approvals in order to do so. Yes. Now, after the assessment gets over, for how long can my assets and the books be maintained? Income tax comes and says the books of accounts or documents seized shall be returned within a period of 30 days from the date of the reassessment order. 30 days from the date of assessment order. Second, where the same can be retained for any longer period, it can be done so after recording the reasons and getting an approval from your PCCIT, CCIT, PCIT or CIT, or the Director Generals of the investigation circle. If the person legally entitled to the books of account wishes to object the extension period, he may file an application to CBDT requesting for an extension. Meaning they're coming and saying it has to be sent back within 30 days. But if it is not sent back within 30 days, you can get an extension after getting a prior approval. But if you're getting a prior approval and the assessee wants to object the same, they can file an application to CBDT in order to get it so, in order to get that reduced. So when it comes to assets, the same provisions will apply. They say that the person will have to make an application within 30 days from the end of the month in which the asset was seized, requesting for the release of assets, provided he can satisfactorily explain the nature and the source of the assets, Then in that case, after he makes the application, within 120 days, the assessing officer will have to complete. After 120 days from which the search is completed, the assessing officer will have to dispose of all the assets back. But this disposal will only happen after extinguishing all the liabilities which are there under taxes. How will they be done so, people? The existing assets will be recognized first. Any kind of liabilities will be discharged as follows. First of all, whatever money seized will be used off. If the money seized is not enough, then they will sell all the other assets and release the money. In case any assets are sold off, or any money is still available with me and I'm keeping it with myself, not giving the money back to the assessee, income tax says that after the expiry of the period, the assessing officer will now have to pay you an interest at the rate of 0.5% per month also for the delay he made in giving back the money to you. This will start from the period of 120 days and then go forward till the date on which you get the money back. Yes or no? This is what a search process is, people, from an assessment angle as well. Itself. Again, I'm clarifying to you, all these provisions are too technical and too lengthy for you to understand. Look at the book back questions, answer that much. That is enough for your exam purposes. Yes. Case law for you, which comes and says assets seized during search can be sold and adjusted in pursuance in 132B only when there exists a liability or the liability is determined. Understand? When the liability itself is not determined, can you come and ask for a release of the assets even before the assessment has taken place? Answer is no. This case law comes and clarifies that the liability has to be determined by completing an assessment. So complete the assessment, determine the liability, then you can get the assets released. Before that, you cannot get the assets released. Yes or no? Yes, that is what it is. Miscellaneous provisions not important from exam perspective, so you can ignore it and go. Coming on forward, you are looking at section 292B and 292BB. Look at this from an exam perspective. This is also critical. These two are coming and clarifying that any kind of return, assessment notice, summons, or any other proceedings cannot be rendered invalid merely because there exists some mistake, defect, or omission in the such return, assessment, or proceedings if such return, assessment, notice have been in substance and effect conformity given with the intent and purpose of the law. Summa, there are mistakes in the law. There are mistakes in the notice. The notice, the order and all has simple mistakes like the name change and all those things. Simple mistakes and all cannot come and tell the assessment order as invalid. If the provisions of the law has been complied in the spirit of it, then the notice, order or summons, everything becomes valid. Look at the case law. The case law comes and says issuing of an assessment notice in the name of a non-existent amalgamating company even after being intimated of the amalgamation is not a curable defect under section 222B. Hence, the assessment proceedings on a non-existent entity was void ab initio and mere participation in the proceedings may not be operating the estoppel of law. Maruti Suzuki in this case come and clarified saying that whenever a notice is issued in the old company, even after amalgamation has taken place, and I've notified the officer that yes sir, there is an amalgamation which has taken place, still if the officer is ignorant and is issuing notices in the old company, then the notice will become invalid. the notice will become invalid. Here is where you cannot come and say, no, my intention was very clear, I wanted to do it in the new person. No, that will not be taken into consideration, because you are issuing a notice to a non-existent entity, and therefore the notice will become invalid. The notice will become invalid. This is the case law which I would assume as important. It has come in exam multiple times, so please therefore bear this case law in mind. Bear this case law in mind. Moving on forward to 292BB, this comes and says that wherever an assessee is cooperated in any proceedings, wherever an assessee is cooperated in any proceedings, then any delay in issuing the notice, any delay in issuing the notice will not be rendering as invalid notice, will not be rendering the notice as invalid just because they have been issued after the deadlines. Just because they have been issued after the deadlines, those notice will still continue to be valid. Those notice will still continue to be valid. Although, please understand this very carefully, people. This provisions will only apply where the notice is delayed. Where the notice is delayed, this provisions will not come into picture where the notice was not even issued itself. Meaning, if you have forgotten to issue the notice itself and I have completed the whole assessment without even issuing the notice, that assessment order is invalid completely. That assessment order is invalid completely. There is no delay itself here. There is no issuance itself. Therefore, it will become fully invalid. It will become fully invalid. For assessment proceedings to commence, it is mandatory for the assessing officer to issue a notice under 143(2). The scope of 292B is only for serving of notice having certain infirmities to be proper and void and valid if there was requisite participation. Section is not intended for a complete absence of the notice itself. Hence, non-issuance of the notice under 143(2) cannot be called as a curable defect in spite of the participation by the assessee in assessment proceedings. This was clarified in Lakshman Das Khandelwal. This is the next case law which has been coming in exam multiple times, so please be careful about this. This case law comes and clarifies if the notice is not issued at all, then the notice will be invalid. The assessment order will also be invalid. Just because the assessee will participate in the case will not be rendering it valid. Will not be rendering it valid. Are you clear? Are you clear? Yes, yes, great. This marks the end of your chapter called as assessment procedures. This marks the end of your chapter called as assessment procedures. Let's also do the small topic of appeal procedures so that you understand this completely. Any one of the two, you'll get a 4-mark question. Yes, when it comes to appeal procedure, people, I'm coming and saying appeal procedures can be done with 4 people in income tax. First is to your JCIT or CIT. Second is to your ITAT. Third is to your Supreme Court, High Court, and fourth is to your Supreme Court. Coming to a JCIT or CIT, only assessees can file an appeal. When it comes to ITAT, department or assessee both can file an appeal. When it comes to High Court and Supreme Court, also both can file an appeal. But when it comes to High Court and Supreme Court, you can only file an appeal for question of law, whereas for the other two people, you can file a question of fact also. When it comes to CIT will take an appeal within 30 days. ITAT will take an appeal within 60 days. High Court will take it within 120 days, and Supreme Court will take it within 90 days. Yes, that is what the provisions are. No files of appealing will happen by the department in case the conditions are not satisfied on the very end. In case the conditions are not satisfied with the very end, which means if the tax effect is not more than 50 lakhs, department cannot file an appeal before ITAT. If the tax effect is not more than 1 crore, department cannot file an appeal before High Court. And if the tax effect is not more than 2 crores, they cannot file an appeal before Supreme Court. Understand, I'm talking about cases where the lower authorities have allowed it in the favor of assessee and department wants to go for a further appeal. That will not be permitted. Yes. Coming to the JCIT and CIT approvals. Now, JCIT is an amendment for the current year where they came and clarified that normally an appeal has to be done by CIT appeals, but starting this year, even a JCIT appeals can also take up an appeal. Income tax says an appeal has to be filed before the JCIT or the CITA within 30 days from the date of passing the notice of demand. Within 30 days from the date of passing the notice of demand. In case you want to file the form, you have to file it within form number 35 along with statement of facts and grounds of appeal. And issuing the following fees. People, these fees are important from exam perspective. It has come in exam multiple times. At least as an MCQ, so please be bearing in mind. What are the fees, people? If the total income which is assumed by the assessing officer is less than 1 lakh rupees, you have to pay 250 rupees. If it is more than 1 lakh rupees and less than 2 lakh rupees, you have to pay 500 rupees. If it is more than 2 lakh rupees, you'll have to pay a fees of 1000 rupees. But if it's any other cases, like it's a penalty order and nothing relating to total income, it will again come back to 250. Meaning exam 2 questions has always been tested. One, they come and say that the assessing officer has proposed an order in which there is a loss. In which case the fees will become 250. Second is where they're coming and saying the assessing officer is proposing for a penalty order for which you want to file an appeal. Even if the penalty order is for 5 crores, you will still pay 250 rupees only, because penalty orders are not total incomes. Please bear that in mind. Yes. Now, coming the current year, the coming year comes clarifies who can file an appeal before JCIT and who can file an appeal before CIT. This is not critical and important for you from exam perspective, people. The one thing which you need to keep in mind is that the only 2 orders which cannot be filed an appeal before CIT is one, an order passed under DRP. If an order has already been confirmed by a DRP, direct appeal goes to ITAT. Second, if it's any kind of order which is rejecting charitable organization. charitable organization, because understand, charitable organization is going to reject the registration by a PCAT or a CAT. Same category of people cannot do an appeal, so there also it will go to ITAT. There also it will go to ITAT. Yes, these two things to be kept in mind. Third thing is that if you are going to have any order passed in accordance with GAR provisions, passed in accordance with GAR provisions, because GAR provisions are also passed by the PCAT or the CAT, passed by the PCAT or CAT. Therefore, you cannot file an appeal before CAT appeals for this, because it is on the same cadre. So this will also go to ITAT. Any other order which you have, is appealable before JCAT and CAT as well. JCAT and CAT as well. You can keep that in mind. Yes. Next thing, they're coming and clarifying that, Rahul, if at all there is any order appeal filed, if at all there is an appeal filed, and during the course of appeal, if you want to produce any additional evidences, can you do so? Answer is yes. JCAT or CAT can admit additional evidences if they are confirmed that the assessing officer refused to admit such evidences, assessee was prevented to produce such evidences due to sufficient causes, and AO made an order without giving sufficient opportunity to look into these evidences. For these three reasons, you can file an additional evidence before the CAT for them to take them into consideration. Yes or no? Yes. When an appeal is filed before CAT and JCITA, they can take the appeal and either confirm, reduce, enhance, or annul the assessment proceedings. However, these officers have not been given any authorities to remand the case back. These authorities have not been given any authorities to remand the case back. They cannot remand the case. They have to make a final conclusion. But at any point of time, if you are proposing to give the order against the assessee, please ensure you grant them an opportunity of being heard. Yes or no? Keep that in mind. Yes. Next, I am coming and saying, if you are going to file an appeal before ITAT, you have to file the appeal within 60 days from the date of passing the assessment order. The assessment order after giving effect to CAT order, people. Or if at all that is not there, but directly you can take an appeal to CAT order also. So 60 days from the date of issuing the CAT order, you have to file a ITAT appeal. The appeal has to be filed in form number 36 after giving the following fees. If it is less than 1 lakh, then you have to pay a fees of 500 rupees. If it is more than 1 lakh but less than 2 lakhs, it is 1,500 rupees. If it is anywhere more than 2 lakh rupees, it is 1% of the assessed income or 10,000 rupees, whichever is less. And finally, again, if it's a penalty order, then you'll go back to the original number, which is 500 rupees. These appeal fees has to be filed only by the assessee and not by the department. Department fees will be borne by central government. No one else will file the appeal. No one else will pay any money. Yes. Now understand, where either assessing officer or assessee are already filed an appeal against an order, and the other party wishes to file a cross objections, he may do so without paying any additional fees. He may file a cross objections, and in that case, their cross objections will also be taken into consideration. The one critical thing which you need to know is, normally from a DRP case, you can be the only person filing an ITAT appeal. Departments are not permitted to file an ITAT appeal against a DRP directions. But in case you have filed an appeal, then the DRP directions against the assessing officer can go for a cross objection. We discussed this when we did transfer pricing revisions, people. Please bear that in mind. Yes. How does it work? When it comes to ITAT, there is always a two bench member. But if it's a single member bench, then it can be one case where it is only if the assessed income is less than 50 lakh rupees. And if it's a special bench which is required just because there are cases are different and there is more than two people who are making contradictory decisions, there can be a 3-member bench also which can be done. That can also be permitted. Yes. Orders which can be appealed against, like I clarified to you, you will take all the orders of CIT appeals, but at the same time, if it's any DRP directions, you will directly take it to ITAT. If it's any GAR provisions, you will take it to ITAT. If it's an order cancelling registrations under section 10, 11 and 12, then you will take it to ITAT directly. Other things are something which is clear, straightforward. Yes. Now, when it comes to ITAT, they're coming and saying that, Rahul, where the opinions of the bench is differing, they will issue for a majority decision by using a 3-member bench. If case there is any mistakes which are apparent from record from the ITAT order, then you can file a application before the ITAT requesting them for rectification. Or if there is mistakes, they can also suo motu file a rectification within 6 months from the end of the month in which the order was passed. Next, in case there is any ITAT order which you are filing, which is going on, and during such time you have a demand pending, you can file for a stay application. And ITAT will grant you such stay. For a period of 180 days or such extended period. After this 180 days, not more than 365 days, can you have an extension. After such extension, you will mandatory have to deposit at least 20% of the deposit money. You'll have to deposit at least 20% of the deposit money, meaning whatever is a disputed deposit, on that you will have to give a 20% demand deposit. You'll have to give a 20% demand deposit. Once you do that, ITAT will grant you an stay of the balance 80% for a period of 180 days up to a maximum of 365 days. Up to a maximum of 365 days. Yes. Look at the case laws. The case law come and say, foreign currency loan obtained for leasing company for financing the leases taken by the client is an activity concerning the business of assessee, and hence the forex loss would be allowable as deduction under section 37. Standard 37 case law. Such a claim raised at the stage of ITAT for the very first time can also be entertained as restrictions against it are only applicable to assessing authorities and not tribunal. Yes, there was a Supreme Court decision in the case of Goetze which came and clarified that any fresh claims cannot be made before the assessee. Any fresh claims cannot be made before an assessee, but no such restrictions are given under an assessing officer, against a CIT appeals or an ITAT, and therefore this case law is coming and clarifying that even if there is a fresh claim which is made before the ITAT, you will still be able to grant such benefits as an ITAT person. Next, ITAT has the power to recall its own order for entirety for correcting a mistakes, but they do not have the power to review their own order on merits. They do not have the power to review their own order on merits. They cannot come and review their own order, but they can rather call the whole order in entirety and pass a fresh order. Point number 3, where the delay in disposing the ITAT appeal is not attributable to the assessee, it cannot be said that the order of stay will be automatically vacated. In such a case, the proviso is arbitrary and unpredictable, irrational also, meaning if at all the 180 days is crossed, and the reason why the 180 days is crossed is because ITAT is not passing the judgment, in that case, assessee cannot be penalized and be requested to pay the demand of the stay will still continue. The stay will still continue until and unless the ITAT passes the order. That is what is clarified. Point number 4, even in case where the appellant does not appear for the hearing, ITAT is bound to hear the appeal ex parte and dispose the appeal on merits. Just because the assessee is not appearing before the case cannot be a valid reason for you to come and dispose the order completely. Yes, you need to look at the materials available on record and still pass a judgment in the most right spirit after granting any reasonable opportunities of being heard. Yes, after this comes your High Court decision. High Court decision comes and clarifies that when you have an appeal to be made to High Court against an ITAT decision, you can do so within 120 days from the date of order. Whenever it's in High Court, all the procedure of CPC will apply. Civil Procedure Code will be taken into consideration and all appeals will be disposed in that manner. Yes, coming to an High Court, the case laws come and give you as following. High Court, being a court of record, has an inherent power to review its own order, meaning although ITAT has no powers to review its own order, High Court has the authority to review their own order. Second, High Court can review its own order where the grounds for review were discovery of new and important evidence which was not within the knowledge of the petitioner earlier, or a mistake or apparent record which undermines the soundness of the order or results in miscarriage of justice. Reviews will not be maintainable in case the repetition of old and overruled judgments or minor inconsequential mistakes. For simple things and all, I cannot sit and review my own order. There should really be a valid reason for reviewing my own discussions. Next, while deciding on an appeal, the High Court cannot hear and decide on the case based on the questions urged by the appellant. The court is obligated to formulate the substantial question of law themselves and decide on the case based on the questions which are formulated by themselves. They cannot just like that copy paste everything given by the assessee. They will have to create their own substantial question of law. Point number 4, delaying filing an appeal to an High Court on the grounds that the appellant was seeking alternate remedy under section 254 for rectification of mistake apparent from record is not acceptable and shall not be condoned. Appellant should have filed the appeal mentioning in the memorandum of appeal stating that an application has been filed before ITAT which is pending as on that date. Yes, you cannot come and say that I have gone to ITAT and I have requested for some rectification or some miscellaneous petition therefore I did not file the appeal before High Court. They would come and say that if you are doing such things, first file an appeal to High Court, inform that you are also looking for a miscellaneous petition. You will win whichever it is better. You will take the winnings in whichever it is better. Yes, next, in transfer pricing matters, it is open for High Court to examine the correctness of the determination of ALP in accordance with the provisions of the Act and rules, and this may be considered as a substantial question of law. This cannot be called as a matter of fact. High Courts can also examine the question of comparability of two companies and selection of filters. These are also permitted because they will not be called as question of law. They will not be called as question of fact. They will still be called as question of law. Transfer pricing matters are perfectly allowed under High Court matters also. When it comes to Supreme Court, they are simply coming clarifying that Supreme Court is permitted to take an appeal up within 90 days from the date on which the High Court order is passed if there is any procedure to be taken up. Yes or no? Yes. The other topics, people, are very simple provisions which are coming and clarifying in case there is any multiple appeals going on. For example, I am coming and saying a question of law is pending in an appeal before High Court or Supreme Court. A question of law is pending before High Court and Supreme Court is identical to the issue which is pending for any other assessment year before assessing officer or an appellate authorities or JCIT or ITAT. I am coming and saying that Rahul, assessee has already filed an appeal before High Court and Supreme Court. Assessee has already filed an appeal before High Court and Supreme Court, and the same facts are also pending right now at assessing officer stage or at any stage below High Court In that case, the assessee may furnish a declaration in form number 8. Assessee may furnish a declaration in form number 8 stating that he would not go on an appeal for the later cases in case the assessing officer or JCIT or ITAT agrees to apply the decision of the High Court and Supreme Court of the later years as well. I can come and file an application before them and come and say that, sir, I would not like to file an appeal and you wasting time on this. Let's wait for the High Court or Supreme Court judgment. Whatever decision is applied there, you can follow the same decision here. I can do that by filing a form number 8. In case the facts are similar and if the High Court passes the judgment in the favor of the assessee, then they will continue to take that same decision in the ITAT as well. But if the High Court reverses the decision and makes it favorable for the assessing officer, in that case, assessing officer will not just like that take it up. In this case, assessing officer may have the opportunity to file a further appeal in order to win the case in their favor. Understand, from a department angle, they will not simply come and let you take the case when unless and until it's a Supreme Court judgment. Understand, if it's a High Court judgment, then in that case the assessing officer may still come and say, I would not like to take the judgment as it is unless and until I file a subsequent Supreme Court judgment. That is what is confirming to you in this. Yes, coming from a department angle, the provision comes and says, where the collegium comprising of 2 or more CCIT, PCIT and CIT is of the opinion that the question of law in case of an assessee for any relevant year is similar to an identical issue which is pending before High Court and Supreme Court in the same person's case for any other assessment year or for any other assessee. From a department side, they can also look for any other assessee also cases which are pending before High Court and Supreme Court. In that case, the collegium may not decide to go for an appeal to an ITAT or High Court. May decide not to go for an appeal before ITAT and High Court. The PCIT or CIT may in this case direct the assessee to make an application to ITAT or High Court within 120 days from the service of order, stating that the assessee will file an appeal the day on which the High Court passes the judgment in the favor of the department. If case the department gets a favorable order in High Court and Supreme Court, they'll immediately file an appeal and get the case won in their favor. But if at all they do not win the case before High Court and Supreme Court, they will sit silent and they will not proceed forward. That's what is clarified to you. Yes, in this case, they are coming and clarifying that in case you have to file an appeal as a department, there are some mandatory guidelines given by CBDT where they come and say if the tax effect is not more than these amounts given, you will not be able to file an appeal as a department guy. Before ITAT it is 50 lakhs, before High Court it is 1 crore and before Supreme Court it is 2 crores. If the tax effect is going anywhere lower than this, then you will not be able to file the appeal as a department guy. Understand, for doing tax effect, you are going to take the tax which is going to be coming after taking all the disputed incomes minus the tax which would have come before the disputed incomes, take the differential, and that is what you will take into consideration for the purpose of tax effect. That is what is clarified to you. Yes. Last things, coming to a revisional proceedings. Yes, this is something which is tested in exam as an appeal procedure, where they're coming and saying at any point of time if an order is passed by the assessing officer, and the PCIT, CCIT, PCCIT and CIT feel that the order is erroneous, and it is prejudicial to the interest of the revenue, then in that case they can request for a revisionary order. Where they can decide to enhance the adjustment, modify the adjustment, or cancel and direct for a fresh adjustment, to the assessing officer for some specific reasons. After these reasons are being recorded, they will have to be sent back to the assessing officer, and assessing officer will take those reasons into picture and pass a revised order after considering the PCIT and CCIT's directions. But in order to do so, one thing which is made very mandatory is that this should be done on examination of records. Meaning the day when the revisionary proceedings is happening, there should be something on the record which comes and clarifies that yes, there is a prejudicial order which has been passed. If any data is coming to you post the revisionary proceedings initiation, that will not be considered for the purpose of revisionary proceedings. Yes, they come and say record means all documents relating to the proceedings which is available at the time of examination of the file by the PCIT, CCIT, PCCIT or CIT. Revisionary of issues which were found in the search cases after the notice was issued for revisionary proceedings could not be said as part of records and therefore will not be taken into consideration. Erroneous would be the following cases. The following cases will be treated as erroneous in the hands of the assessing officer. The order is passed without making inquiries or verification where such inquiries should have been made. Any kind of order passed without granting any relief or inquiring into the claim. Any kind of order which has been made not in accordance with the directions issued by the instructions of CBDT, and any order which is passed without considering any directions issued by the High Court or Supreme Court, in case it was in favor of department. In case it was in favor of department, in any of these reasons, if at all the directions are not being assigned properly, PCIT or CIT can request for a revisionary proceedings. Can request for a revisionary proceedings. Any revisionary proceedings has to be passed within 2 years from the end of the financial year in which the order TP order is passed. Period of 2 years will not include any kind of time limit which is taken for rehearing the cases. And in case the assessee has decided to go for a further appeal against the revisionary proceedings, income tax says revisionary proceedings cannot be initiated for the following cases. Cannot be initiated for the following cases. The PCIT, CCIT, PCIT or CIT cannot open reassessment, cannot do revisionary proceedings for cases which are decided in appeal. Meaning if cases are not even decided at all, that can be taken. If cases are issued and not appealed for, it can be taken. If it is any of the cases which is not even decided for, or it's not even taken into consideration, that can also be taken. Meaning if it's a finally concluded case, then it is not to be revisionized. But if it's not concluded yet, you can still do a revisionary proceedings on it. Any kind of order which is against your beliefs and you feel like you want to file a further appeal against revisionary orders, you can only directly file an appeal to ITAT, because PCIT and CIT appeals are at the same category. Case law comes and says, where the issue sought to be revised has already been decided by the CIT cannot invoke section 263 stating that the same is pending before ITAT. Yes, because if the case is already decided, it is finally decided. Just because it is pending before another appellate authority does not mean that you can issue a revisionary proceedings on it. Might as well let's wait for ITAT to come in. Yes or no? Yes. Brings you to the last topic, people, which is called as section number 264, which comes and says that if at all the assessee feels that the order is erroneous, and rather than going for a further appeal or requesting for a rectification, they can come forward and they can request for a revisionary proceedings by the appellate authority, by the CIT, PCIT or CIT. Meaning at this point of time, the assessee can decide that they will like to make an application before the 4 category of people requesting for the revisionary proceedings of the order. In which case, if the PCCIT, PCIT, CCIT or PCIT makes a suo motu claim, then they have to pass an order within 1 year from the date of passing the order, which is to be revised. If the assessee is making an application, the assessee will have to make an application within 1 year, and the PCCIT will have to pass an order within 1 year from the end of the financial year in which the application is made. 1 year from the end of the financial year in which the application has been made. Now notice one thing very carefully. You can only file an application under section 264 for revisionary proceedings, provided the assessee confirms that they will not file an appeal before CIT appeals. Provided the assessee files in confirmation that they will not file an appeal before CIT appeals, they're coming and saying you can only file a revisionary proceedings where the time limit for case has not been expired. And assessee has not waived off his right, in which case I will not permit you to file a revisionary proceedings. You will have to exercise the right to waive off the appeal. Second, order is pending before any kind of JCIT or CIT appeals. Third, order has been subject matter of appeal before the people. Meaning, in simple words, if you have already chosen to go for an appeal, revisionary proceedings are not allowed. Here is where comes in the concept of total merger, people. This is one exam question which comes and asks you something. Imagine a case where I have an order. I have an assessing officer order where there are 2 disallowances. One is section 40I, one is section 37. I decide that for 37 I want to go for CIT appeals, and for 40I I would like to take a revisionary proceedings. Understand, people, if the CIT voluntarily wanted to do so in 263, they could have done so. But since you are under 264 says that if the order itself has been appealed, then revisionary proceedings cannot be taken. This is called total merger. Where I am coming and clarifying that if at all the order has been appealed, I don't care whether one of the issues is appealed or not appealed, none of the issues can be go for revisionary proceedings. Meaning, either take the full order and come for revision, or take the full order and go for appeals. Second thing which you need to keep in mind is that if a revisionary proceedings is passed, under section 264, whatever the officer proposed, whatever the PCCIT, CIT and CCIT propose will become final. Which means you don't have the authority to go for an appeal against the revisionary proceedings under 264. While you may do so against 263, you cannot do so against 264. Meaning 264 is a very risky model where if you choose to go for a revisionary proceedings and the officer does not allow it in your favor, you will have a permanent loss right now. You will not be able to get this in your favor at all. This is what the provisions of appeals are, people. Yes or no? Yes. These are the provisions for appeals, and then I've come and clarified what is the timelines which you can use and all those summary things for you. Again, not from an exam perspective, this is more for your better understanding. Great. In a matter of about 1 hour 20 minutes, we have completed the revision pertaining to appeals and assessments also. If you feel, please go through this recording sessions before you want to display on it yourself and you want to evaluate yourself. At the same time, if you feel like you can do better, please definitely go back to the book back questions in order to understand and practice these questions. One of the questions from a book back will be definitely tested in your exam, so please pay attention to those and you will be able to get your exams better. Yes, that's it from my side for today, people. We'll come back with some more videos for you to understand your learning better, and we are also doing something good for your May 25. So in case you're interested and you're applying for May 25, November 25 exams, please do feel free to reach out to us and we can discuss it together. Yes, until such time, goodbye, take care.